Chicken Genius Singapore has sold completely out of Palantir stock at $9 something a share. So I want to share, obviously, my thoughts on, do I think that was a good move, a bad move in the short term, in the long term, all those sorts of things in this video. He's also calling for a stock market crash, which I believe he's been calling for over a year now. So we'll speak about that. We'll speak about like a few factors that I think is worth paying attention to, and kind of the way to think about, is the market going to crash, not crash, things like that. And, before we get into that, and by the way, and at the very end of this video, I'm just going to share a few stocks that I'm paying attention to for earnings this week. It is actually another busy week for earnings here, okay? The first place I want to, by the way, I hope you guys enjoy, so always thank you so much to everybody subscribe to the channel, okay? First place I want to start out here is, there was a time when I really felt like Chicken's advice was really, really good in regards to the market, okay? And, I'm not going to say he's right or wrong in terms of if a stock's going to go down in the short term, you could buy it back and all those sorts of things. The one thing I'll say is just he used to be very practical in the market. Don't try to time the market, build a great portfolio. And I watched a lot of his old content, and I thought he did a really good job of messaging, of keeping people focused. And it just seems over the past, I would say 12 to 18 months or so, he's really gotten off track, and he's now all in the market, all out of the market, all in a stock, all out of a stock. And, last week it was all, I got my stock portfolio all in Palantir, and now it's like, I'm out of Palantir at $9 something a share, right? And so it's just all over the place. And I can tell you, as somebody who's been in the market 15 years, I've been lost several times. And the two main times was 2015 and obviously 2021. 2021, started buying crazy amounts of unprofitable stocks and got completely away from all the practicality of the market and building out great portfolios of profitable companies, and got into so many, unprofitable stocks that wasn't even funny. I went from a guy that would own 1 to 2 unprofitables to next thing you know, I own 7. It was ridiculous. Okay. So I've been down that road. And in 2015, I got into all earnings trades and trying to time in and out of the market. There was even a time period in 2015 where I sold my entire portfolio, which was the only time I've ever done that. That was crazy. And I actually did it. So, and I thought I could start timing the market and things like that. So when you're in the market a while, sometimes you just lose yourself. And he can say he's making money and whatever. Okay. I'm not a hater. I'm not here to hate. I just don't think he's on the right track, and I don't think he's preaching on the right track, because we know how this ends up. And I'm not saying for him, maybe he can be the one person that is a super successful, swing trade and trading in and out stocks and things like that. That's from the retail side. But we know how this ends up for retail when they try to think they're going to be traders in the market and in and out of these positions and in and out of their portfolios. We know how this ends up. For retail, it doesn't end up well. I mean, even for Wall Street, the most professional money managers that have super unfair advantages, even for those guys, it usually doesn't end up well. And so it's no hate. I'm not hating him. You always talking about haters. I have no interest in hating him. I just think he's gone from making very practical advice that's good for the masses to now this craziness of, in and out of the market and in and out of these stocks and all this stuff, man. And so that's just my opinion on that portion of it, and I hope eventually he gets back to just that kind of that old, way of building out great portfolios and stocks you're proud of for the long term and those sorts of things. And so once again, no hate. I don't hate him. If you see this, I don't hate you. Okay. I just think in terms of, your strategies and what you're pushing out to a lot of people. I mean, massive amounts of people watch your videos. And I just think you're going away that I don't think is healthy for you or the audience or anything like that. That's just my personal opinion. So no hate, man. Okay, that's the bottom line with that. That's just my perspective as somebody that's seen your channel for quite some time now. Okay, so now in regards to a crash, I think there's a few things to keep in mind here. Okay, if you're thinking about market crash, one is inflation is becoming less and less of a problem week after week after week. These are trueflation numbers that now have us at 3.49%. There's a high probability the next time the government numbers come out, which is in a little less than a month from now, there's a high probability will be something with a low 4, potentially a high 3, but probably a low 4 in front of it, okay? And so in terms of inflation, it's becoming less of a problem. The Fed's likely done in terms of raising rates. Why are they likely done? Well, inflation is becoming so much less of a problem. The Fed funds rate right now is around, a little above 5%. And as far as trueflation, they got us at 3.49%. Even on the U.S. government numbers for last month, right, that has that 4.9%. So now we're at a place where CPI is now lower than Fed funds rate, which means essentially the Fed can likely wrap this game up in terms of raising rates. It doesn't mean they're going to cut rates. They could cut rates if, anything gets ugly or if they have any data around that, in a few months from now or a few quarters from now if they want. But in terms of raising, it doesn't make sense anymore at this point in time. If you had a huge spike up in inflation again, and let's say next month came in at 5 something, which it's not, but let's say that happened, it's a whole different ballgame. Then the Fed has to, at that time, consider, continue to raise rates. It just doesn't look realistic. So it looks like they're going to, I would say 99% sure, like they're going to pause now and potentially start cutting based upon the fact that now we have a Fed funds rate above CPI. And it looks like the spread there is going to start getting big, really big and really quickly, okay? And the other way to think about it is if you're going to talk about, crashing this market, the really hard thing is, folks, is you're going to need the biggest companies out there to fall substantially after they already fell last year. One is we could be at peak trough earnings right now, or trough earnings. That's a potential, okay? That's something you have to consider, that Q4, Q1, and Q2 are kind of trough earnings, and things actually get better, especially for the big dogs that really run the market in 3Q and 4Q. It's a consideration. The other thing you've got to consider is there's a reason I got LA real estate up here, okay? Personally, I'm certainly not the biggest fan of Los Angeles. I have no intention of ever moving to Los Angeles, and no hate to Los Angeles, okay? It's just not my cup of tea. But we can't deny the fact that LA real estate is always in insanely high demand. Why is it? Well, it's seen as like the best market you could possibly invest in for real estate outside of maybe Manhattan, okay? And so nonetheless, LA real estate, as soon as prices drop a little bit, there's always a ton of people ready to buy. The same thing I just shared with you there about LA real estate is also true about the best stocks in the stock market. Apple, Microsoft, Nvidia, Amazon, all these companies that are the best of the best companies in the world, as soon as their stock prices drop a little bit, guess what? People are ready to pounce. They're ready to buy those stocks. And so that's why it's so hard to get those stocks to fall off a cliff. And their earnings have held up pretty respectable. I mean, Apple, quarter after quarter, I'm like, this has to be the quarter Apple, has horrible earnings. And they come in and it's like, no, it's not that bad. Microsoft is just as stable can get. And so to get those stocks to go down in any substantial way and to crash, which, and once again, if you're going to get the market to crash, you're going to need Apple, Microsoft, Nvidia, all those companies to crash. It's hard, man, especially when you already got a major mini crash, if not a full-on crash for a lot of those stocks last year. So that's the problem. That's the problem is you need Warren Buffett to say, I'm selling out of Apple stock. You need other massive investors of Apple to say, I'm selling Apple stock, to put that sort of selling pressure. And then you need people to say, I'm also not going to buy Apple stock when there's a million people waiting to buy Apple stock at the smallest little dips. That's the tough part. And so you can always get a crash in the market, but it's difficult, man. And you've got to understand, especially when it comes to those companies, they have such big weights in the market. Apple, Microsoft, those are the LA real estates, okay? That's the bottom line with that whole situation, okay? Now let's talk about Palantir. Let's talk about, selling Palantir in the 9s or whatever, okay? First off, from a long-term perspective, obviously I believe that's a very poor decision, okay, for a long-term perspective. I believe, Palantir has such an incredible product and such an incredible opportunity in front of the company and over the next 5-10 years. The profitability is literally at the infant stage. There's companies just getting to profitability. And I mean, wait to see how this baby ramps up the profitability over the next several years. This is like first inning in this game. So from that perspective, on a long-term basis, in my opinion, just a horrible decision to sell all your Palantir stock. From a short-term perspective, in my personal opinion, also a bad decision, okay? And the reason being is the company's now been profitable 2 quarters. They need 2 more quarters of profitability here to ultimately end up getting an SP 500. So we're probably about, I would say we're between 6 and maybe 10 months away from Palantir getting in the S&P 500, okay? If that's a scenario, and we're anywhere from 6 to 10 months away, I can tell you as we get closer and closer to S&P 500 inclusion for Palantir, what's going to happen with their stock price? Well, likely you're going to continue to see massive inflows in regards to Palantir's stock price, okay? You're going to see more and more hedge funds buying in. Imagine next quarter they have a third profitable quarter, then it's like one more on their end. So as you get closer and closer, there's going to be more and more people buying in. Now, also from a selling perspective, like how many Palantir bulls are really going to sell? You could have somebody that was just trading at short term, like obviously Chicken was there, right? In regards to selling it. But at the end of the day, are you really going to get the long-term bulls to sell out of that stock? No. If anything, the long-term bulls now have more conviction in Palantir than ever. And if anything, all the long-term bulls in the stock are much more likely to continue to buy these shares rather than sell these shares. So for Palantir, we're looking at a story here that is very, very bullish for the next, 6 to 9 months on top of the next 6 to 9 years. And that's a rare thing you get in the market, where you have a really attractive opportunity in a stock for the next few months, but also you have obviously an incredible opportunity for the next few years in regards to this one, okay? And obviously in regards to Palantir here, I mean, they just beat revenues very nicely last quarter. They obviously beat on EPS as well. They put pretty low guidance out there, in my opinion, so they could come in with a nice beat. And we're looking at a company that on 2024 numbers is trading at a 2024 PE of roughly 36, 37. And once again, this is a company that's at the infant stage of profitability. So when you're talking about a company that's at the infant stage of profitability that has among the best gross margins you'll find of any public company in the world, I think it might be undervalued significantly. And if we want to add a cherry on top in this whole situation, look what Alex Karp said. The depth of engagement with and demand for artificial intelligence platform is without precedent, which means they just have overwhelming amount of either government clients, commercial clients, asking questions about their product, looking in their product, interested in their product. And if that's the situation, you're going to see massive amounts of closed deals for Palantir over this next, I would say, 12 to 36 months. And obviously, once Palantir gets in the door, they got a pretty sticky business model there, and they're likely going to keep, the majority of these customers they attract over this next 12 to 36 months, now that everybody has to consider an AI plan for their companies. So, I mean, Palantir is in a really good setup for the short term and a really good setup for the long term, okay? Whether the stock goes down next week or next month, it's anybody's guessing game, but things are positioned pretty darn well for Palantir now at this point in time, okay? So obviously I don't super agree with that. As far as earnings going this upcoming week, few companies I'm kind of paying attention to. One is Home Depot. Obviously very, very important to pay attention to Home Depot numbers, see what they have to say. They're obviously very important always in regards to the housing market. I think Home Depot, keep an eye there. I think Target, keep an eye on Target. Big dog Target, you got to keep an eye there. Cisco, I don't really care too much about them. Alibaba, Walmart, if you're interested in any Chinese stocks, Alibaba's one to keep an eye on. Obviously, Walmart. I think Walmart's just good to pay attention to for what they have to say about inflation. And John Deere, I think that's a good one to pay attention to, DE there. And then Foot Locker. I personally own Foot Locker stock, so I'll be keeping an eye there. I hope it goes down. I would love to buy some more shares of Foot Locker. Great dividend stock. I appreciate y'all. Much love as always. Thanks for enjoying this video with me. Thanks for being subscribed, folks. And have a great day.